Hey everyone, how's it going? It's Russell Matthews here. Now, as of last night, a senior government official has apparently leaked some details as to what's inside of the upcoming budget that's going to be announced later today. And this is as of multiple reports on various different news sources. This senior government official has gone largely unnamed because, of course, they're not authorized to talk about it, but it has revealed some details about what's inside the budget. And it has to do with some new programs that are going to be announced, some information on whether or not certain benefits and financial supports will be extended into the future, the ones that were created at the beginning of the pandemic, as well as some new taxes that may be applied to certain Canadians going forward. So in this video, we're going to do a deep dive on all of these potential leaked informations, this leaked information that a senior government official, according to Globe and Mail and CBC, Toronto Star, has put out. We're going to go over all of that information that could be inside of this budget coming up. But before we do, make sure to check out the links in the description where you can get 50% off of the Canadian Money Mastery program with coupon code LAUNCH, as well as opening up other investment accounts so you can start taking your wealth into your own hands, which is so important these days. All right, let's get into all of this leaked information. First, let's start off with what has been reported to be the largest and most important focus of this budget, at least in the eyes of Chrystia Freeland, the finance minister who's going to be bringing this forward, and this is a national childcare program. Let me show you what I'm talking about. We've talked about this a little bit on the channel before, and we predicted that this could have been one of the central focuses of the budget because of a talk she gave at the Liberal Policy Convention just last weekend. But it says here that they're planning on laying out more than $2 billion for a national childcare program while keeping the federal deficit for the past year under the $400 billion mark, and this is coming from CBC News. Now, there are a couple of key things to note here that's included in this paragraph, and that's them saying that this program, and I believe they mention it lower down in the article, this program is set to be a $10 per day program. Now, there was talk about a free childcare program coming in, but it seems like they're going to set this mark at the affordability level of $10 per day, 5 days a week. That would be around $200 per month per child to have full childcare. At least that seems to be what the Liberals are planning here. And again, I'll emphasize all of these details are just leaks. We're going to find out very soon when they actually release the actual document of this budget. We're going to be live streaming it later today around 4 p.m., 3:30. By the time you're watching this, we could be live right now, so make sure to check that out. But remember, we're going to know these details for certain at that point. But yeah, so $200 per month per child for full childcare. That's what they're targeting here in this childcare program. And it seems like, unlike in the past, they're not really going to put time aside to studying the effects of this, seeing how we can implement this, seeing how we can work together with the provinces to make sure that we're only covering what's in our jurisdiction as a federal government. It seems that this one is going to be fast-paced and focused on action and implementing it soon, expecting to see this come into place in the next year to a year and a half. I know that's a long time, but in government terms, that's just a snap of the fingers. So it seems that this national childcare program is what the Liberals are most excited about in this budget. It could be the most important line item inside of the budget with this new program that they're planning on implementing. So it makes it seem like there's not going to be some huge announcement when it comes to maybe a potential UBI being implemented. We've already predicted that that may not be a large concern in this budget, but it does raise the question, what's going to happen with the future of benefits? We just talked yesterday about how many of these benefits are ending in September. For people who are on the CRB, you only have 19 periods to apply, meaning if you started applying back in October, you'd be ending at the end of June. So what's going to happen with the future of that, as well as the pandemic business supports? Well, let's take a look at this article here. And they say, to deal with immediate concerns, the source said, the federal budget will acknowledge that pandemic financial supports are still needed and will not be cut off as the crisis drags on with the worsening third wave. That information is roughly in line with reporting by the Toronto Star earlier Sunday that said Freeland will roll out a $12 billion extension to the Canada Emergency Wage Subsidy, as well as the Canada Emergency Rent Subsidy and lockdown support, key programs that have helped keep small businesses afloat over the last year. The Star also said that all of the main pandemic support programs will be extended until the fall. So that's some interesting information. I actually read this Toronto Star article, and they put a large emphasis on the business supports, right? The Canada Emergency Wage Subsidy, the Canada Emergency Rent Subsidy. This is where they put all the information. So it seems that the source outright talked about this to the Toronto Star, to potentially CBC, to the Globe and Mail, saying that these programs will certainly be extended. I think they're set to end in June right now, likely to be extended until September. That's the business supports. But there wasn't any outright talk of the more benefits that go directly to people's pockets, employment insurance programs, program, the CRB, CRSB, CRCB, but it does seem that they're hinting here that they're going to recognize, okay, we're not quite out of this pandemic, we can't really roll back these supports. So I'm thinking it's more and more likely that CRB and the related supports are going to be extended to the maximum, to the 26 periods available for people to apply for it, meaning that even if you started applying for the CRB way back at the beginning of October, end of September, you'd be able to apply for every single period along the way, all the way until September 2021, if that was what was necessary for you. So again, we're going to have to wait and see in this budget to know for certain, but it seems like sources are saying that this is very likely, that it's just going to be an extension of these programs until the maximum cutoff date, or the latest cutoff date for these programs due to the way they were written into law in the legislation, September 2021. Again, as a reminder, depending on when you're watching this, there's a really good chance that I'm currently live on the channel right now covering the actual announcement of the budget. So if you're watching this video, I believe around 3:30 p.m. Eastern time is when I'm going to start streaming. The budget's set to come out right at 4, so I'd love to see you there. We can hang out together while we find out what's actually in this budget and if these leaks are all accurate. If you want to join me for that, there's a link in the description where it'll direct you directly to that live stream. That link will lead exactly to the live stream that we're probably live on if you're watching this right when I release this video. But the next thing we need to talk about that has been leaked here is some potential tax tweaks, some potential tax changes for the future. And it seems like it may not affect too many Canadians, but let me explain exactly what they are. I'm going to pull this up here, and it says that they reported late Sunday that there'll be some tax news in the budget, including the imposition of a sales tax for online platforms and e-commerce warehouses starting from July, and a digital services tax on big web companies starting from January 1st, 2022. Now, this is something that the Liberal government said that they were going to do a while ago, implement more taxes on these big companies that are benefiting from doing business in Canada, but may not, for various reasons, need to be taxed as of the current laws right now. So that's a big deal. We saw some controversy between Australia and Facebook, and when they tried to implement some certain taxes here to sort of curb the ability for these big giant companies to make a whole bunch of money off of the backs of the news industry as well as other things in Australia. So it'll be interesting watching that going forward, seeing how that's going to change what's going on in Canada. And they continue here saying online platforms include foreign-based vendors with no physical presence in Canada that sell products such as mobile apps and online video gaming. So again, they're emphasizing these companies that can do business in Canada but may not have their home base in Canada, just making sure that the taxes that are on businesses are being applied to them as well. Now, no matter where you land on taxes, whether or not you think that we should have less of them on businesses to grow more economic growth in Canada, or if you think that people should pay their fair share, at least these giant corporations, that's okay. Either way, no matter which way you think about it, on this channel, you're welcome here. We like to talk about all these differing opinions, but it's always interesting to think about how could some of these things that are being applied to the larger businesses impact potential future small businesses that are created here in Canada. I always think it's a good idea to encourage people to create businesses and more economic growth inside of Canada. So we always want to be careful when we implement new taxes to make sure that this isn't going to be disincentivized. It seems there's also a tax here on some luxury goods, a tax on new cars and private aircraft valued at more than $100,000 and boats worth over $250,000. RVs and snowmobiles would be exempt. So again, people who have a lot of money and are spending over $100,000 on a car, well, it seems like they're going down the route of tax the wealthy on these sort of things. Not an awful idea if you have that kind of money to buy something like that. And then also here, the government is planning to tax vacant residential property owned by non-resident, non-Canadian owners from January 1st, 2022, sources told Reuters. So that's interesting. A lot of people have been complaining about foreign ownership driving up the prices in Canada. Now, how much of an effect that's actually having on the Canadian housing market? Well, lots of people have different opinions on that. I think a far larger driver of the housing industry here in Canada and the insane growth we've seen is how low interest rates right now are, and essentially how the Bank of Canada is printing around $4 billion a week and adding that money to the system. Lots of new money. Low interest rates means people spend more on housing, easier to get a loan. I think this is the main driver of the current housing market, but I'm sure this could be a measure that could potentially help. Now, on that same topic of housing, there was lots of talk from various different economists from big banks, as well as people people in the Conservative Party saying, hey, we need to implement some sort of changes to curb this growth in the housing market. It's becoming unattainable for an average Canadian to buy a home. Now, it seems like there may not be that much in this budget based on this leak covering the housing market and what's going on here. So that's interesting to say. Some Conservatives and other people have been pushing and saying, hey, I believe that the Liberal government is currently thinking about adding capital gains tax to primary residences, meaning that you'd have to pay a tax on the growth of your primary residence. Currently, you don't have to do that here in Canada. So that's interesting, but the Minister for Housing from the Liberal government just flat out came out in the House of Commons the other day when I was watching it and said, hey, even though you guys are saying we're thinking about this, this isn't something that we're going to do. We're not going to implement this capital gains tax addition to residences. So it's interesting that they're saying they're not going to do that, but it seems like there may not be some other measures here to cool the housing market. So we could continue to see this tear in the housing market in most markets in Canada go on further, making this affordability and this potential wealth gap between the haves, the people who have invested and have bought real estate, and the have-nots, the people who haven't been able to do that. Well, we could be seeing that gap dramatically increase over the next year if nothing's done to sort of slow down the asset inflation that we're currently seeing. Then, of course, we get into the question of how we're going to pay for all of these new programs, all of this new spending, and they get into that here too a little bit. And they go on here to say that the federal government has faced criticisms for the stimulus program it outlined in the fall economic update as being unnecessary in the face of what might be a strong economic rebound as pent-up Canadians prepare to splash out once the pandemic peters away. This is the idea that, and the data has shown this, that Canadian savings rate has gone up substantially throughout the course of this pandemic. Now, it may not feel like it for the people who've just been scraping by and have been challenged through this, but many people who were able to receive supports and were able to sustain their lifestyle because they weren't able to entirely lose their job, they were able to easily go online. Well, the savings rate on average for Canada as a result has gone up. People are saying, hey, why are we adding all of this additional stimulus going forward if we just have all this pent-up savings that's going to be released into the economy as stimulus? This is the criticism, right? But also at the very same time, the International Monetary Fund has come out and said that they want to urge the let me see, I think it's right here. Yeah, the International Monetary Fund, the IMF. It's a group of a bunch of different countries that are all part of the International Monetary Fund. Well, they've said to Canada, hey, don't pull back your supports too quickly. And this is something that the Liberals say all the time, is that it's far more expensive to pull back supports too early than it is to pay a little bit too much just to keep those supports in place. So that's where the Liberals land on that about whether or not they're going to be able to keep up with this spending rate that they're currently on. And of course, now it seems like Canada is going to have the ability to spend even more because just last week they voted through a bill that would increase the cap of the amount of money that Canada as a country can spend going forward, an additional $600 billion higher than it was before, right? Now, this is interesting because people say, like, who's going to pay for this? How are we going to pay this back if we have a deficit? How are we ever going to pay back this debt? And I think it's in the plan for the Canadian government just to never pay back this debt. Well, right now they don't raise most of their money through taxes. They actually do it through issuing Canadian government bonds, which the big banks buy. And then right now, at least, the Bank of Canada is buying those bonds from the big banks. So this is how they're essentially adding money into the system at the very same time as subsidizing the Canadian government's spending. Now, it gets a little bit complex when you get into exactly how all of this works, but it's interesting to think about the fact that, hey, we're not paying for all these programs with our taxes right now. It's just on Canadian government debt. Now, whether or not they're ever going to pay that down, well, we don't know. Whether or not inflation is going to be a problem going forward as we keep these interest rates low, and the quantitative easing program, the Bank of Canada buying up all of these Government of Canada bonds, essentially, whether or not that's going to add to inflation. Maybe we've already seen inflation in asset prices and stocks, and maybe not as much in the CPI, but certainly there's been a little bit of inflation in the assets. Well, we're going to have to keep monitoring this going forward. But at that point, I want to invite you again over to the live stream. By the time this video releases, it's likely that I'm live right now as you're watching this. So check out the link in the description where you can tune into the live announcement of this budget. We can fact check all of these sources, find out what's really happening here, and go into the details of this budget so you can find out what's going to happen for Canada going into the future. And if you've been watching the channel channel for a while, you probably know that I'm pretty frustrated with the government and in particular the education system about how little they educate Canadians when it comes to personal finance and money, one of the most important things in our lives going forward. So I'm excited to say that I've made a course that I'm now going to be offering with all of my thoughts and all of my information, the things I've learned over the years about managing your personal finances. It's called Canadian Money Mastery, and you can check out the link in the description. It's the official launch of this program, so you can get 50% off of the program. It's the cheapest it's ever going to be right now. So if that's something you'd be interested in, you can find the link in the description with coupon code LAUNCH. And of course, check out the links in the description where you can open up your own investing accounts. It's so important that we take our wealth into our own hands. We can have all of these supports through the Canadian government, but you can never really count on them in the long term. So we have to take advantage of these things for our own wealth and our own families going forward in the future. And with all of that said, thank you so much for watching, everyone. I really hope you've enjoyed this video. Hope it's helped you out at least a little bit. And I'll see you over there in the live stream where we're going to be live again 3:30 p.m. probably until like 6 or 7. So I'll see you over there. Have a great day, and I'll see you next time. This channel is supported by viewers like you. Thanks, channel members.